Hello guys. I promised you that going forward I'll try and give you a video, one video a day. So yesterday I gave you two videos. As usual, every Sunday I give you about two videos, and then today it's a Monday. So I want us to look at something that we do check it once in a while, which is gold. And if you're new here, make sure that you subscribe and you also hit the bell icon, or you can even refer the channel to your friends, which would be very great, right? So that we reach more people, so that this knowledge that I'm sharing here, you can also pass it on to other people. And also, if you're interested in learning this style of trading further, you can always text me, and then I will see what I can do for you. All right. So let's get started. Like I already mentioned, that this is what you're going to be looking at today. It's gold, okay, gold, né? So as always, we always start at the top. So Toma Dimu and then work our way down. So this is our weekly chart. So we need to go to the highest time frame so that we just have a quick look. It's like what could be about to happen in terms of the long term kind of a thing, even if it's not long term, maybe in the next coming a couple of weeks or so. That's why you need to check the monthly chart. So this is how our monthly chart looks like. This thing has been dropping. It's been dropping for a while now, which is like almost the same trend as like what you had there with your things like Nasdaq and stuff like that. They've been falling for quite some time now, because this day it reached there. It was around just last year we've been dropping until now. Probably this year, the entire year, we've been going to the downside, and now we even broke this point here, because was a very strong area. We've been above that area since Woma 2020. We've been playing above this price, which is above $16,600. We've been playing around above that, and now we dropped below it, which means the key support that we had around there has been taken out. Now you have to shift to the one below, because remember, we always need to know where the nearest support is at, the active one. Once that one is taken out, you shift to the next one. So in this case, because the one that we had there was taken out, you then shift to the one lower than that one, so that you always have a zone above and a zone below. So in this case, we've got somewhere around there as your resistance, because it's the one that pushed down, broke all these areas of support on its way down. So that is why we have it as our resistance. And in terms of the support, remember, the problem here is that this one is quite ugly. The one from here, the one from this, yes, anywhere from here the price might start to react, but it's quite ugly, so I wouldn't trust it that much. I would maybe go in with the limit orders. It's quite ugly when you look at the type of candlesticks that you have there. But the one here, this one is very strong. It's very strong when you consider how it looks like, the type of candlesticks that you have there. But the only negative thing would be that it is not fresh, because it was formed here, and then the price came back and tested it there, and then rejected, and then it moved up like that. But it is still a very nice looking and strong area of support. Should the price come back to it, maybe that's where everything will start to, start pushing up like that. But remember, a movement like this takes a very long time. I mean, look how many months it took for it to drop like that, which is about 7 months or so, or for it to move from this to that. It's not something that can happen in 1 month, unless if there's something really huge happening fundamentally. But otherwise, it will take some time. You'll have very strong downtrends in between on your daily charts, weekly charts, because remember, a price doesn't always move to the upside. You see this, something like this, it may look like just a pause here on this time frame, but on a daily chart, it will have a very strong trend. That is why I'm saying, even when you do get a trades to go to the upside, you need to understand that it's not something that is just going to be a smooth ride to the upside. Yes, it can be smooth ride on this time frame, but when you're looking or monitoring on a different time frame, you will realize that it's not that smooth. Because even if you look at this, this was a very strong move to the upside. These are very strong moves to the upside, these ones. But when you look on your monitor it on a higher time frame, none of that is visible. This just looks like a smooth move to the downside, which is why if you do get a trade from, let's say, from this, and you decided to hold it for a couple of months, almost 6 months, 7 months or so, you just need to make sure that you need to avoid smaller time frames. You can't be holding a trade and then you're saying you're going to hold it for more than 6 months, but then you end up monitoring it on H1 or daily, because otherwise the structure is going to change there, and that will say to you, now you can't continue holding it. So it means if you want to hold it for that long, you're going to have to make sure that you only make your decisions based on this time frame. I hope that is clear. So in this case, I said anywhere from this, the price might start to react, but this one I don't trust it that much. I would prefer the price coming to this one, and that's our nearest area of resistance. And it is still very much bearish this time frame, and we still have some distance before we hit the support, meaning we can still get those trades to go to the downside if we get an opportunity to do so. Now let's check weekly, which is the weekly chart. and see what we have here. On the weekly chart, we're still very much bearish, and the bearish trend line that we have is this one here. This is the bearish trend line, and we have us being bearish. This is our what? This is our resistance. There's your resistance, and maybe in terms of the support, you can use this one here, but it's not a good looking one given the type of a candlestick that you have there. But it is your support. You can use that one and say it is hit. So that's your support, that's your resistance. If it, remember, when you're approaching those yellow lines, that's where your areas of support on monthly chart is gonna start from. But otherwise, this is still very much bearish, and we can still search for trades to go to the downside, but keeping in mind that we are touching the support. So you need to be careful now. It's not the same when you're still pushing to the downside and you didn't have anything nearby. So here, when you look at it, you can see that there is your resistance that was hit. Maybe you could have searched for trades there, because even if you were to assess this, Mr. Parker and Mr. Who is the other guy that has asking a question? Mr. Parker and Tabang. You see, if you are trading this time frame, let's say you are someone executing on weekly, and you know your monthly is bearish, your weekly is bearish, then you have that zone. You start doing your what, like I showed you. You start assessing it. Then you tick all the boxes that apply, and then you decide to pull the trigger there. And remember, when you pull the trigger anywhere around there, that's your first take profit, because of what you'll be asking yourself. We're not saying that is a support. We're just saying, why did the price turn here? What if it turns again? So that's why you have to make sure that when you get there, you exit, you put the remaining one to break even. In this case, like I said, we are still very much bearish, because we are just testing this area of resistance. And when the price left that area of resistance, it gave you what you call bearish engulfing, which is also suggesting that the bears can still push to the downside. So currently, we don't yet have something that can say to us buy and hold for long term, because of what the structures are still very much intact, the bearish structure. So now let's move down to our daily chart. Things are starting to get very interesting on our daily chart, because we had this. When we're still moving to the downside, this was our trend line, and the trend line was broken by, hey, this is a very nice, not nice, a very weird looking area of support. This one here, marking it is very tricky. But the movement from anywhere around there, it is the one that did one. That did what? Is the one that pushed up. And when it pushed up, it broke the trend line. After breaking the trend line, the price paused here on a very tiny looking area of support. Then it pushed up again, breaking areas of resistance, pushing all the way up to the next area of what? Resistance, which is inside that weekly resistance. Remember, on weekly, we did have the price pulling up to that area of resistance, which is why when you're buying, if you had been holding those buy trades, you can't say, I'm holding a buy trade and then I'm not going to exit. It's a long-term trade. But now your weekly does not agree with what you're doing. The weekly is saying, no, I don't yet have the capacity to push all the way up. So that's why it's very important that when you're holding your trades, you target the next opposite structure and then you exit. So in this case, the weekly was hit, right? So remember, this is what I mean. I want you to pay attention. This is our weekly chart. I mean, the weekly bearish trend line. I mean, the weekly resistance and the weekly bearish trend line there. Let's just put the actual trend line so that when I explain this, you all follow. I hope we are still on the same page. So there is your weekly bearish trend line. There is your weekly resistance. And then we hit there to be bouncing from around that weekly, what do you call it? The trend line, right? We're bouncing from the support and also around the trend line. So now after doing all of that, then that's when the price started to reverse. Let's just put it. I want to make sure that everything is drawn up to scale. Yes. So that's where our weekly zone is at. So I want you to pay attention. So that's the trend line. We can remove it. Not so important on this time frame. But I want you to see that this area of resistance that I'm talking about, it is inside the weekly one, which is why I'm saying when you knew that your daily trend line was taken out, daily was bullish, and you have a very nice area of what? Of support there. Now, if you try to buy from that, remember the price is coming from a weekly area of resistance. And if you're trying to buy from this already, you know, whatever I'm trying to do here, and understand that the support looks nice, the takeoff, the profit margin, everything looks nice, the accomplishment and everything. But the challenge now is that the momentum is pushing to the downside because it's coming from a weekly resistance. So meaning if you were planning to do any smash and grab here, it has to be with what? Confirmation. But it's very risky because of what? Where the price is coming from. And you can see that after hitting that, the price did actually try to move up because of what? we did have one bullish candlestick from around here, but it couldn't even go until to this candlestick there. Then that's when it got defeated. You see, that's why you need to understand the structure on different time frames, especially the ones bigger than the one where you are trading, so that you can see if you're fighting against bigger structures or if you're pushing, they are pushing in your favor. So now the price pushed all the way down to what? To this one here, which is the one that initiated everything. Still, if you want to do what? If you want to buy there, if you wanted to buy, you had to make sure that it is with what? With confirmation, because we do understand all the accomplishments that the zone had, but now we are worried because of what? Weekly is bearish, and we're still coming from a weekly resistance, and the trend line is still holding. We're bouncing from that. So whatever you are trying to do to the upside, it has to be something like a smash and grab. Why? Because this time frame, the time frame is bigger than this. They're still strongly to the downside, and we're just coming from a very fresh area of resistance on weekly. So that's what I'm saying. When you're trying to buy, it has to be smash and grab. You can't buy and then tell me that you will exit next year, because now the bigger structures don't agree with that. So why are you deciding on against them? You see? So that's why if you'd gotten that buy from this, you'll be targeting the next opposite structure, which is this. Then you are out because of what? The bigger structures, you still come. You don't want to end up pushing too much against this weekly resistance. Be careful. So that's all that we have here. We do have this as our support, this as our resistance, trend line taken out, then this support here taken out. Keep that in mind. Now let's check a different time frame, which is our what? Our H4. So on our H4, we can put, let me see if we can do that. You can put this as your trend line, this one, and this as your resistance. Now you're hitting the resistance, but the challenge is that the candlestick opened outside the trend line, which is something that Tabang likes to do, but it's quite tricky. Should the price fail to come back, you will be left there hanging. But maybe if you're saying it's fine, I'll take it, knowing very well that this area of resistance on H4 is inside the daily area of resistance, maybe you'll say I'm taking it because of what? The backup that I have on daily. And also when I think back to what I saw on weekly, we were just coming from a very fresh area of resistance, and we had weekly bearish engulfing. So maybe the momentum from all of that can end up giving you another chance to push like that to the downside, right? But make sure you have a very tight stop loss. So that's all that we can say here. So basically on this one, because currently we cannot yet say the trend line we closed outside, but let me see, you can put this here and say there is my trend line, and that trend line not yet have a candlestick outside. So meaning maybe if you want to have let me see, the nearest support, we can say it is still quite far. This is our nearest support, this is our nearest resistance on this time frame. Maybe if the current candlestick closes there, that's when you know you can do your modifications and shift to a new support. So there is your support, there is your resistance. Maybe from where we are, you get that confirmation. You can't go with the limit order because of what? Because your H4, the structure is changing. So you need to wait for that confirmation, and you're still insisting on taking that sell, because what you saw on daily and what you saw on weekly and what you saw on monthly, they are still saying momentum has got a higher chance of dropping to the downside. That's why you are so insisting and then saying that you would search for a trade to go to the downside. So let's do one more time frame, which is what? Which is our H1. On H1, the structure changed. You can see the type of candlesticks you were having there, and then you pushed up, but you didn't have so much reason to take those trades. So we don't yet have anything that is saying the best could be coming in, because of what? This also does not look like bearish rejection candlestick, but we do understand that on H4 we are inside the H4 resistance, and also on daily we are inside the daily resistance, if I still remember. Yes, so we're just looking for that one signal that we can use to say I would use it to execute. So maybe I don't like M30, let's just do straight to M15. So you can go to this M15 and say I know where I am with in regards to what, with the relation to what, with regards to your bigger time frames, and then you can put your trend line there and say it is not yet violated. That's why even when the price gave you that bearish rejection candlestick, If you know that that bearish rejection candlestick did not form in the middle of nowhere, it formed inside the weekly the daily sub resistance and the H4 resistance, and then you're looking for that just to say the bells are coming in, I can execute. You were saying, because I'm executing using the structure on M15, even the next opposite structure I'm targeting has to be on M15. And on this M50, the next opposite structure is your support and also the trend line. And we did hit the trend line, and you can see the rejection candlestick there. That's when you're like, I hit the next opposite structure and the price looks like it's being rejected, I'm out. But buying is not safe because of where we are. We're still around those resistance areas. So maybe if you want to get that trade to the downside, maybe you just wait for the price to break this. When it breaks this, maybe even the support is taken out, then that pullback is what we're gonna say. I get the pullback to the nearest resistance, I can buy or sell that, because we're saying what, even here we are very much leaning towards to the downside for as long as we don't break this. And also on H4, I think it was the same thing, because we're saying we are touching this. And even what we saw on weekly, when we said we're just coming from a fresh area of what, of resistance, we had the bearish engulfing, we have a chance to still push down. But which is why I'm saying you get that break of this trend line on this time frame, that's when you can say the structure is changing. You target that resistance, a pullback, you can hope that it will do something like that. You're not gonna go there and just sell instantly and stuff like that. No. Where here you could do that because of what, you know the location, you know the direction, and then those pin bars you're getting on this time frame inside the daily and H4 areas of resistance, you could have taken that, and it's just a short-term thing. Because of what I always tell you, you don't trade against any structure. Once that structure is hit, all you have to do is to take your profit and then just watch how the price reacts around that, so that you can see if it's worth you continue with taking more trades in the original direction, or just waiting until the structure changes, then you can start to search for new trades. So in conclusion, we can say that maybe if you get the break of this, you can hope that you will get a deeper move to the downside. That's it. So that's all that I think I'm gonna say with regards to this, which is gold. And we will meet in the next video, which is gonna be most probably tomorrow, because I try to give you one video a day. So we will meet in the next one. But if you are interested in learning all these concepts that I'm articulating here in more details, you can just always text me, and then let's see what I got for you. But otherwise, don't forget to give me that sub and a like if you think this content that I'm sharing here is useful. All right, I'll see you in the next one. Sharp, sharp.